Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. $USD account. So there's quite a bit to this strategy, but you'll pick it up. You will want to subscribe to this channel and watch my videos every day to get the biggest benefit out of these videos, because the more you are exposed to these videos, the better and more quickly you will understand this strategy and then be able to implement it in your own daily trading regimen. So you can go to Thinkorswim and download the platform. It might be through the TD Ameritrade or Charles Schwab. Not sure. I think Charles Schwab acquired TD Ameritrade and Thinkorswim. But anyway, just Google search Thinkorswim platform and then download it. Anyway, so I'll create a separate video on how to do that. But let's go ahead and jump in. First thing I like to do is let me load. Okay. I like to first see what SPY is doing. This kind of tells me what the overall stock market is doing. Here, let me delete these trend lines. Remove drawing. Okay, so you can see that SPY is trading kind of at the mean of this linear regression channel. This strategy is primarily a mean reversion trade, so ideally you'd want to enter your position right here or right here. Let's see, this is a 9-month daily. Let's switch it to a 1-year daily. So you can see over the past 1-year time frame that the SPY or the S&P 500 has been in a downward trend. So you'll see this is the price chart with linear regression channels. We have a MACD 12.26.9, slow stochastic, and an IVR ping. So I want you to pay close attention to the price action with the MACD and the stochastic. This is somewhat helpful, but not necessarily overly important. So look at the price when the MACD and the stochastic are in the overbought territory. So let's see. If you sold or bought puts or sold calls or sold a bear call spread right here and then bought it back when it was about right here, you've done quite well. It would have went from 455 to 375, 377. You'll never get 100% of the move. Usually you'll get maybe 75, 80% if you're lucky. I've placed thousands of trades and I've maybe once or twice captured the full move. And that was just complete luck. You don't want to shoot for a home run every time. We're looking for base hit, doubles, triples. Home runs will just end up causing you far more pain than it's worth. You just want to do base hits consistently, being profitable. So looking at the price, MACD and stochastic right here. Also, it's helpful to see how SPY has interacted with your linear regression channels. So you've got the upper bound. So this middle line, dotted gray line, is your mean, 1 standard deviation, 2 standard deviations. And this is -1 standard deviation, -2 standard deviation. So this would have been an excellent place to short the SPY and stocks in general. So right here, MACD is way overbought. Stochastic is overbought. And then you could have just been opening short positions until it got to, see, this would have been a little nervous, right? But right here, this area would have been a good place to close out your short positions. And when the stock market is in a downward trend, we're only taking short positions, right? So because SPY and the overall market has been in a downward trend, we are only looking to take short positions. So either buying puts, which I do not recommend, or selling calls, or selling bear call spreads. This strategy is mean reversion with collecting premium. You never, as a rule, in my trading strategy, do you want to be a positive, or do you want to be buying calls or puts? You always want to be a seller of options. You want to collect that premium and allow the time decay to work into your favor, right? So This is not an ideal time to go short because of where the price action is in relation to the linear regression channels and MACD and stochastic. Looking at the MACD, it's telling me that there's potential upside. So SPY may retrace back up to previous highs, or, maybe the 405 level, maybe 415. But this could also be a fake out, kind of like over here where it never crossed the MACD zero line. It's hard to say with the dynamics of the current stock market, but once again, this is designed to teach you the strategy. Even though today is not an ideal day to put positions on, there is still money to be made. So let me start you from the first thing I generally do is look at SPY and then determine what the overall market is doing. And I like to think of it as swimming with the trend, right? Would you rather swim against a strong current or just go with the flow and let it take you with it? And counter trend trading is exponentially more challenging than trading with the trend. So trading's already difficult enough as it is. Why not put things in your favor as much as possible? That's why I always do my best to trade with the trend. And when I break that rule, it ends up costing me in terms of losses. So it's not worth it. Just don't trade against the trend. There's a saying, the trend is your friend. Very, very important that you remember that when creating your trading rules. So here are some search criteria that I've set up. I'm looking for stocks that have at least 1 million in daily volume, trading at $10 or more per share, has 200 option volume, and 200 option open interest. You're welcome to play with these variables, but I generally keep them here. It gives me plenty of potential trade candidates. Like I've got 390 here to go through, so that's more than enough. What I'll do is, after I run the scan, click this menu, save as watch list, and just give it today's date, 2023, 3/28. Hit save. Then come over here and find it in your watch list. And I'll create a separate video on how to set up your platform so that it mirrors what I have. So you won't have to worry about trying to figure out all these settings. You can just click a few links and you'll be on the same platform essentially that I'm using. So then I go to charts, and looking at this chart, it is the opposite of what I'm wanting. Um, primarily, I'm looking like where I have my mouse cursor right here. If this is what I saw, then I would be interested in taking on a short position. Like I would sell a call up here around 160, and hopefully the share price would stay below that. In this case, it just fell apart. This is probably a bank, would be my guess. First Republic Bank, yeah. Yeah, so I feel bad for them. I went from, it's a bad month, went from 145 down to 1260. Ouch. That's bad month for anyone. So here we go. Initially, it looks like a good entry, but as you can see from the linear regression channels, it's in an upward trend where if we were to sell short, there's a good chance that it will not go our way because of the overall upward trend of this particular ETF. It looks like it's a ProShare ETF, probably a leveraged one. So another one of my rules is never trade a leveraged ETF. I've just been burned too many times. Yeah, so stay away from, and it will take time to learn the various ETFs and which one are leveraged. But I know from experience this is a leveraged ETF, so I'm just going to stay away. All right. This one looks tempting. It's not a perfect setup. Like if the MACD looked like this today, I would be salivating on placing this trade. But even so, look how it touched this one standard deviation move and it kept going up. So this would have been a bad trade to sell short around here, and it kept going against you. But over the last year, look how well AUPH has respected this one standard deviation linear regression channel. And it finally broke above it and then used it as support. So this one I would keep an eye on, waiting for some weakness. But then again, let's go ahead and place a trade on this, just to kind of show you. I know this video is already running long, so. Okay, so it's trading at 1123. So I would go to trade, and I generally look for 45 days to expiration. This is 52 days till expiration. And then I like to trade like around the 17 delta, and the lowest delta on the May 19s is 27. So let's see, 17 a share. That's way up here, right? Let's look at the 14 just from like a technical standpoint. I would be comfortable selling a 14 naked call. So we get a buck. Now, because this is for beginners, we're going to do a bear call spread. So we're going to sell the 14 and then we'll buy the 17. I generally like to have 5 strike wide on my credit spreads, but because we can only do 3, we can work with that. So to do that, you would left click on the bid and then hold down Control key on your keyboard and then left click on the ask of the 17th. So left click the bid on the 14 strike and then Control click on the ask of the 17 strike. If you've done it correctly, it should look like this. Basically, we're selling to open the May 19th 14 call while simultaneously buying the May 19th 17 call. We're taking a credit of 49 cents per contract. And with options, you multiply that by 100. So we're receiving a $49 credit. But because the strike's width is 3, we're risking $300 to make $50 roughly, right? So, and the order confirmation box will do the math for you. So right here, it's saying your buying power effect is 183. So this is what your buying power effect reduction is. So what's the max we can lose on this trade? Because we're taking in a credit of $49, it is deducted from our max loss of 300, which is the difference of the strike width. So basically, we're risking $251 to make $49. And because we're doing the 14, the risk is calculated based on your short strike. So looking in that 14 strike, we've got a 76.53% chance that short strike will expire out of the money, which is what we want. That would be our max profit of $50 per contract. Okay. The deltas of 41, that is not generally what I look for, but I wanted to give you an example of a trade setup. So ideally, we could do a naked call on the 17 and take in a 50. Here, let's do that. So right here, we're risking $251 to make $50, right? So let's go here. We'll close this and we'll sell the 17. And here we're risking $128 in buying power effect to make 55. But see how our max loss is infinite, right? So let's say if you sell the 17 and some news comes out and it runs up to $100 per share, you're going to be forced to go into the market and buy 100 shares of AUPH at $17. And buy it at $100 and give it to the person that bought the short call from you. So you're risking basically the difference in the share price at expiration. So it's quite risky when you're going naked. So I would not recommend it when starting out. So we'll just do, I'm comfortable from a technical analysis standpoint, selling the 14 and buying the 17 for insurance, right? So let's see. Let's take 48 divided by 252. That's a 19% return on return on investment, or yeah, so I usually look for 10% or more. 19% is twice as good, probably because there's slightly more risk because it's a 41 delta strike. But also, something to keep in mind is only trade about 1% of your net liquidation. So because it's $100,000 account, we want to spend no more than $1,000 per trade, right? So this is 252. Sorry. So buying power effect is 184. So that tells me we can do 5 contracts, right? And I always change it from day to GTC. And here we're risking, or buying power effect is being reduced by 922. So when calculating risk, I use the buying power effect reduction as just a quick and dirty calculation. And we're taking a credit of $240 for the next, I think it was 52 days. So we'll send this off the market, and then you should see the market the orders sitting out in the market waiting for fill. Let's go on to the next trade. No, I don't like that. Oh, looks like we just got a fill. All right. Oh, sorry. This is interesting. BMEA. When you see an exponential move up like this, the bigger the exponential move to the up or downside, it will usually snap back like a rubber band to the linear regression channel line. So I really like when I see a chart like this. So let's go ahead and jump over the trade tab. Looking at the 30, see the option chain only goes out to 30 for the May and the July expiration. So yeah, it's giving it a 60.28 probability of expiring out of the money. From experience, it's probably more like an 80-85. Now, it's more risky if you enter the trade now as opposed to waiting for it to show some weakness. But since this is paper trading, we can take on a little bit more risk. But when you're paper trading, you want to trade as close to how you would trade real money as possible, so that when you transition from placing paper money trades to real money trades, it will be a smooth transition for you. But I'm fairly confident it won't be able to sustain this type of run-up. So really, if you're wanting to be extra cautious, you can Google search BMEA stock and see what is causing this gap up in the share price. But let's see, we'll just do a naked call on the 30. Want to move it over to the midpoint. Midpoint is just basically the midpoint between the bid and the ask. is where the midpoint gets its term or its name from. So here, because it's saying max loss is infinite, we want to use the buying power effect as our calculation for return on capital. Sorry, ROC. So for 40 divided by 348, it's 126%. So high risk, high reward, right? So you need to find the happy median of how much risk you're willing to take on for how much of a reward. Honestly, in the next 52 days, I would be extremely surprised if it closes above $30 per share. So let's do, because we're taking on additional risk, it's a naked position, we'll keep it under 1,000. Right, so we're risking essentially $734 to make $880, right? So let's go ahead and send that off to the market and move on to the next one. And we got to fill. That's why I like to go the mid. You'll get more money for selling your positions instead of just buying it at the natural. Probably 80% of the time I'll get filled at the midpoint, so I don't even bother with the natural. Okay, actually, yeah, that's the linear regression channel is an upward trend. Not interested. GameStop, I generally don't trade GameStop because it's kind of manipulated. JNUG, it's an ETF on the junior gold miners. With gold in the stock market. No, I avoid gold trades right now. Not sure how it will react with all these Fed announcements. Okay, so here's AI, and it had a pretty good run up because of like the GPT news articles, and AI is starting its mass adoption phase. But let's see, it hasn't been able to sustain a $30 price level. So let's look for a $30 strike. So yeah, there we go. We can sell the 30, buy the 35. We could get a 65% credit. So risking $321. Buying power effect to make 65. So let's see, 60. So let's see, it's a little over 20%. So at that criteria, we can do 3. So risking 964 to make 195. So we'll send that. And when I'm placing trades, that's about how long it takes me to make the decision to enter the trade or not. And with time, you should be that fast, right? Comfortable will come with experience. So FAS is an ETF. No, yes, okay, it's FAZ. So if this were not an ETF, a leveraged ETF, I would consider like the 2750 strike or the 30 because of where the MACD is and the stochastic. How MACD is going to cross to head lower. Stochastic just crossed and is heading lower. So, I'm not breaking arrows, sorry. Okay. So there's always more trades. So don't break your rule to chase a bad trade. Trust me. Okay. See, here's another one. FSLY. I've actually traded it in and out of this one, and it has been defying gravity since mid-February. I guess it could be running out of steam. No, my gut's telling me no. Okay, so let's keep looking. So the reason why I passed this one is because the stochastic is heading higher as well as MACD. So my experience tells me we'll probably retrace back up to around 29 a share, between 29 and 30 before it heads lower. And we're only taking short positions. I guess I could make a quick $4 a share, but I don't play that game. BITO, this is the ETF that tracks the Bitcoin. No, maybe. See, so MACD is crossing, heading higher. Stochastic is crossing. No. Okay. Mixed signals pass. And one thing I also keep an eye on is the implied volatility in my watch list. I generally don't like trading anything with less than 50 in the volatility. So once I get to the 50 volatility, I'll stop looking for trade entries. No. Yeah, see, I kind of gathered that looking at SPY, there wasn't going to be too many trade setups today. And that's also why I placed a trade that I normally wouldn't have. Just so I could show you logistically of what I go through when placing a trade. And I'm trying to do my best to explain my thought process that I go through when placing the trade. And sorry for talking slowly. It's the voice modulator I use. So feel free to speed up the video so that my voice sounds more normalized speed. So here's a good one, AMD. I actually had a position on this before I reset the platform for these videos. So yeah, this is actually a really good example of what I look for. So it touched the top linear regression channel. It's only done it once all year. And as you can see, it couldn't sustain it back on March 30th of last year. So we've got MACD crossing over. We got the slow stochastic had crossed down. Also, I haven't really gone over the DMI or RSI, but DMI, the green, is heading lower, which tells me there's a change in direction. So, and then RSI crossed to the downside above the overbought territory within the last couple days. So, yeah, this is not like the perfect day to enter, but it's close enough to where I would still be happy putting on this trade. So I would consider like a 110 strike. Let's see what the delta of the 110 is. So it's a 23. I generally like a 16 or 17 delta, but technically speaking, I'm comfortable with a 110 just looking at the price chart. So let's see. We'll do the 110, sell to open the 110, and buy the 115. Okay, so buying power effect is 422. We're taking in $78 credit. Okay, so that's 78 divided by 422, 18% return on capital. So that's above my bare minimum of 10%. So we got a green light right there. 422, so we can do 2 contracts to stay under our $1,000 per trade maximum. Remember, 1% of our net liquidation. Excuse me. So we'll send that off. And also, I forgot to mention, I like to trade during the last hour of the trading day. And looks like we just gotta fill. All right, so AMD, and was it Intel, had similar price? Yeah. It would be, if I placed an Intel trade about the same time I'm doing an AMD trade, it would be essentially doubling my trade because they are both semiconductors and they oftentimes will trade in sync with one another. So you need to be careful when placing 2 trades on similar stocks like that. That could be unnecessarily doubling your exposure. So if AMD went against you, then chances are Intel may go against you as well. And that would be not ideal. Okay, here we go. ITCI. See, it gapped up. Earnings was back on March 1st, so we don't have to worry about an earnings surprise during the life of our trade since we're only going out 52 days. Yeah, I like this one. So let's look at and I also look at the previous highs that this stock has experienced within the last 12 months. Yeah, okay. So it generally has stayed below 60, and the more often the price touches a level and fails, the stronger that resistance level is. So let's look at the 60. Okay, 210. Yes, I realize the delta is a 38, but I'll let the technical analysis override that rule for this trade. So we'll take in $1.20. And so buying power effect 380, max profit 120. 120 divided by the buying power effect reduction, 31%. Not too bad. 31% return on your investment to risk, 380 to make 120. And because we're doing this 60 strike, we have a 70% probability of expiring out of the money. But from a technical standpoint, I would bump it up to like an 85%, just from experience. So I'll send that out. And we're getting close to the 0.50 implied volatility. I got excited until I realized that was AMD and we'd already placed a trade on it. Okay. Yeah. Okay. I think we should be good with those trades. So we've got 2 openers. We've got 1, 2, 3. Yeah, so we've placed 5 trades, 3 have filled, 2 are open. And you could see, oh, looks like we had our ITCI fill, so we just got the 1 open, and it's right at the 65-cent mark for a price. So we should see fill within the next 40 minutes before the market close. So I'm not going to adjust this trade. You could bump it down to, say, 60-cent credit, but I don't think it's necessary, and it will most likely fill. So that's it for today. Make sure that you subscribe to my channel and hit the bell notification to be notified the next time I release a video. My goal is to release one of these videos every day. Oh, looks like we just get our fill. So all 5 orders have been placed. And then tomorrow, on tomorrow's videos, we'll review how our previously submitted trades are doing. Now, so far we're up $30. But most of the time when you place trades, you are in the negative. Or your PL open will be negative on that trade, especially the same day or a few days after opening it. So this is a good sign, but it is not too common. So don't freak out after placing your first trade that it's showing negative. But yeah, once again, this is Stock Options Hero, and we'll see you tomorrow in my next video. Take care.